So we got one chart for hogs, and we got a few lined up for cattle. But actually for hogs, there's quite a few things we can speak of. First thing this chart says, these are new contract highs for any hog month ever were posted here today. New highest highs of any contract ever for hogs. That was posted here today. As far as key issues, why? Number one, of course, higher corn. The connection with hogs and corn is still a big issue for us. Secondary issues, exports to South Korea. Honestly, we just don't know what to plug in for corn for the added exports to South Korea right now. And these could change the prices by an extra $2 or $3 as far as the potential here. Last thing to speak of, we've got, in fact, a storm. Obviously, with these snows hitting portions of Iowa and a good chunk of Illinois, we are going to have some slaughter disruptions. Today, USDA dropped the kill by a full, almost, in fact, what is this, 37 million compared to where to be normal. 37,000 head less than normal. And now we honestly don't know what to plug in here for tomorrow when it gets even worse here. So at this point, we still have bullish issues lined up for the short term right now on this hog issue. One thing we talked about at the conference, we said we set a minimum target of 98, getting up to 102. We said we think this market's got a chance at hitting 102 on the June contract. With these better exports plugged in now for South Korea, we'll probably have to up that. So we're still bullish on the hogs right now. As far as cattle, a few charts laid out. Of course, Friday afternoon we had a very important report for the long-term nature of the industry. I don't want to go into numbers too much here, but we're going to look at two things right here. Beef cows, the herd right now is 2.4% less than last year as far as the cow herd. What's important on this report is when you break down the number of new heifers. So these are females which have not had calves yet. They're going into the cow herd. These numbers hitting for 2011. So they break it down if they're going to calf in 2011 or 2012. So we've got a 2.4% smaller cow herd, yet a 7.2% drop in the number of new heifers coming into the cow herd in 2011. This sets us up for a very, very, very tight situation here, certainly by the end of the year for feeder cattle and certainly for 2012 for live cattle. This is a very bullish number here once you break it down to the numbers actually going in the cow herd for 2011. So very bullish for end of the year pricing here. The other issue supporting cattle here today, obviously we have some weather problems. Though we have seen the snow amounts reduced for the plains, only 2 to 6 inches for Drew. Our other guy here says 1 to 3 inches. Like I said, they do have eastern Kansas getting the bulk of it right now. The other issue right now is temps, minus 15 degrees, and the other guy says below average. So we will have snow and moisture and extremely cold temps. So that's something that kind of hurts cattle here in the as far as production. So you may see some effect on weight gains. We did see this hit about 2 years ago. And we saw carcass weights drop as much as 20 pounds compared to normal. That's the equivalent of a live animal. I want to say 30-something off of a live animal here. So as far as this goes, we got not just the cattle report, but also the weather being supportive here for cattle. Now, one of the big questions, and we talked about this on Friday's report, is are these meat prices getting too high? Can we get too high where consumers actually stop paying these prices? And here's a chart showing retail meat prices. Yes, they did hit new record highs in 2010 for both beef as well as pork, and chicken's still high. However, when you adjust it for inflation, these are not crazy levels at all. These are not crazy levels at all according to the U.S. consumer's mindset. They're used to everything going up each year. So with this in mind, these are not too high. I spent a little time with a hedge fund on Friday kind of working out what effect these high hog prices mean on retail pork prices. In other words, the guy's question was, well, the packer's paying 40% more or double, whatever it is for a hog this year. What type of pork price does he have to sell this product for? Well, we figured out about 7% gain is all he needs to do for retail pork prices to take into all these higher hog prices. So bottom line here is high prices are not too high yet to turn off demand.